There are two things unavoidable in life: death and taxes. The only difference between the two is you may not know when you die, but you will definitely know when and where you have to pay taxes. Even if you forget, you can be sure that the government definitely won't. Hi, I'm Newfire, and without further ado, I'll get into part 3 of 8 of my series on financial literacy, and today we're going to be covering taxes. What are they, and how do they affect you? So first we need to know what the different kinds of taxes are. Yes, I know, unfortunately there is more than one, but on the bright side, depending on what state you live in, you may have less. Again, depending on the state you live in, you may have more. Anyhow, there are 4 different kinds of taxes: property tax, sales tax, income tax, and state tax. Upon that, when you get your paycheck, you will find 2 more categories of contributions: Social Security and Medicare. These do not qualify as taxes and are instead known as contributions, and we'll get into why that is later. So if you own a home, you'll have to pay a tax on it to the county your house is within, and this is known as the property tax. This property tax that every homeowner pays goes towards funding for roads, schools, and other public institutions. While federal tax is based on income level, property tax varies due to the state and the size of your house. The smaller your house, the less percentage of property tax you pay. However, the tax for a house in Oregon and the tax for a same size house in Georgia will vary because of the states and counties' rules that the respective houses are located in. Next, we have sales tax, which is the tax placed on any item you buy. This is the one tax you've probably encountered every day when you go to the mall or to the restaurant. First, the state takes a share of this tax and then distributes it to the county where the tax is paid. Of course, the government needs to be paid, so they use part of your taxes for things such as salaries, and then both the county and the state will use it to maintain the community, for example, the development and maintaining of roads and schools. However, when it comes to grocery food items, sales tax is exempt in some states such as California. Except for foods that are prepared hot, other food items do not have a sales tax. Other states like Illinois and Arkansas do have a sales tax on food items, however. So we're almost done. We have just federal income tax and then state tax to cover. Say, for example, you earn $5,000 a month in California. You won't take home exactly $5,000 though, will you? That's because every person who earns an income has to pay an income tax. Not everyone pays the same amount of tax, however. The federal government has created tax brackets for every level of income earner in America. These tax brackets are based on what is called your taxable income, which is exactly what it sounds like. It's just the part of your income that can be taxed. As for state income tax, some states require citizens to pay it, for example, California, while some states like Texas and Florida do not. In practice, it is the same as federal income tax, and it is based on where you live and your income. While only some states require you to pay state income tax, federal income tax must be paid by all, regardless of state. Federal income tax is actually made up of 3 parts: the federal income tax itself, and then Social Security and Medicare. If you recall earlier, Social Security and Medicare does get taken away from your paycheck, but it is not actually a true tax. That's because unlike federal tax, Social Security and Medicare will come back to you. The federal government deducts it from your paycheck, yes, but that money goes into your Social Security and Medicare, and that becomes available to you when you retire, at around the age of 62 or so. You might be wondering what Social Security and Medicare actually is and what it does for you. Well, Social Security is a retirement fund. However, the good thing is, you are not the only one who makes contributions to your Social Security. If you have an employer, they match whatever you pay into your Social Security, and this becomes available to you in your 60s. Medicare is exactly what it sounds like. It's a fund that can help cover medical costs in the unfortunate event that you have to visit a hospital or receive treatment. There's one very important thing to know, and it's not exactly good news depending on your future plans. To be able to qualify for Social Security and Medicare, you must work at least 10 years. Every quarter, you get awarded 1 point, and you need 40 points to qualify for these retirement benefits. That means you have to work 40 quarters, and since there are 4 quarters per year, you need to work 10 years. If you're wondering how to calculate your income, there's a great website that you can use to calculate actual income after all taxes and what you will actually take home. It's called ADP Salary Paycheck Calculator, and it shows you exactly how much money you pay for each tax category. Say your monthly salary is $5,000, and your annual salary will then be $60,000, and you also live in California. As a single filer, 22% of your income will be taken as tax. Though you make $5,000, we can see here that you actually only take home 3.9K. 22% of 5,000 is indeed 1,100. As you can see, they have provided the breakdown of how much of the $5,000 goes into each tax category. $381.58 goes to federal tax, $310 is for your Social Security, $72.50 is for Medicare, $202.93 is state income tax, and $55 for state disability tax, which is a fund for if or when unable to work due to an injury. Even though the government requires you to pay so much when it comes to taxes, they do provide multiple ways to lower the amount you pay. The most popular way when it comes to saving on taxes are retirement accounts such as 401k, traditional IRA, and Roth IRA. Another way to save on taxes is to invest in a 529 plan, or HSA. In the case of being self-employed or for small businesses, there are a few more tax-saving plans such as Simple IRA and SEP IRA. The best way to save on taxes, and also the most popular tax-saving plan, comes to real estate. It's a lot of acronyms, but if you want to know more about these tax-saving plans and how they can apply to you, I'll have a video coming out soon that will talk exclusively about all these plans. As for the next video in this series of what is financial literacy, we'll be covering savings and compound interest. Thanks for watching. This is Newfire signing out.